why does he have the record he does? And you have said in a conversation with me, he understands how to look at accounting statements and find the telling point, and
That's
maybe
true.
in a footnote.
That's true.
So that he'll see opportunity and see the future.
He will. He has an ability to do that I think is matched by very few other investors. And he has this broad, extensive knowledge of business, and I think maybe I said this to you, so when something new comes up, he has a frame of reference in which to place it. And then he adds this rationality that I really think just a handful of investors. Well, he doesn't let emotion take over when he's considering whether to buy. He goes at the decision in a very rational way. Then the price goes down and he buys more, whereas most people panic and sell when the price goes down. And he just is, he's extremely disciplined in the way he thinks about investments.
This will take a long time to explain, but how is it that you know value so well? So that if it goes down, you know the value hasn't changed, so you buy more. And so that you know the value, so you're not going to pay a nickel more than the value you see.
I only get into situations where I do know the value. There's thousands of companies whose value I don't know, but I know the ones that I know, and incidentally, it isn't. You don't pinpoint things. I mean, if somebody walks in this door now and they weigh between 300 and 350 pounds, I don't need to say they weigh 327 to say that they're fat. Right. So if they're in that zone, you know, I'm fine with it. And but I also know that there's all kinds of companies that I can't figure out. So I don't. So I do know. I usually know when I'm dealing with companies that I understand, and then I do. Accounting is a language, and it's a language that I like. And
a language you not only understand but like.
I like it, yeah. I mean,
it speaks to you like music.
It really speaks to me, and when it speaks in a false voice, I can detect that sometimes too. You know, I mean, it's it is almost like playing music. You know, when you look at an accounting statement, and it's not true of all companies. They're not true of all companies at all. But you don't have to be right about. I don't have to be right about the ones I ignore. I mean,
so when you see a footnote that says something to you, you just feel a kind of emotional.
It's in the footnotes. You're right. I mean, the footnotes are the tip
good
off.
Or bad. There's the story.
There's a tip off there. Yeah. And Carol is very, very good at this, incidentally, herself.
This clip is where Buffett's legendary value investing philosophy comes to life, and it's especially needed in 2024. While many investors today are caught up in the explosive growth of AI, semiconductors, and quantum computing, Buffett's approach is to focus on intrinsic value. In a market full of overvalued tech stocks, Buffett's strategy of only buying what he fully understands and not paying a nickel more than it's worth is the key to surviving a potential bubble burst. In the coming up clip, we'll see how Buffett uses this same discipline to evaluate businesses and make decisions about where to allocate billions in capital.
Let's look at some of the investments at Berkshire, and some of this comes in. You still have a lot of Coca-Cola?
A lot. Yeah.
You saw the value of that early on.
Well, not early enough. I mean, I probably had my first soft drink in 1935, and I didn't buy the stock till 1988. So I would put me in the slow class on that one.
You still have a lot of Wells Fargo and buying more.
We've got a lot of Wells Fargo.
Yeah, value there. You saw the
sure.
And the qualities you look for. Management is one.
Sure. And some kind of an enduring competitive advantage. Yeah. Enduring being the emphasis. I mean, and I mean, hula hoops were great for a while, or pet rocks and all that sort of thing. Yeah. But I like something where I think I can look out 5 or 10 years and still see the same sort of advantage that maintaining.
So you just invested in John Deere.
That wasn't me. No. We have two other.
Okay. But you know what they're doing, do you not?
No, I don't know what they're doing. I don't want to know what they're doing.
Why is that? Because you've hired to be sort of your.
They manage. They're managing each, I think, around $4 billion or something like that. And
you don't want to know what they're doing.
No, I don't. They have the responsibility for managing that money. They've got to have full authority. They can't look at me and see whether I'm smiling or frowning over it. And they get paid based on how those securities do.
You have said you're hunting for a big elephant.
You bet. Yeah, the bigger the better.
What qualifies as a big elephant?
Well, in terms of our present resources, probably something from 20 billion, maybe up a little bit.
High.
Well, it would depend on how attractive that elephant was. Yeah. Not all elephants look alike.
Now, coming to you, Carol, in just a moment. So you're looking around. How will you go about this process of looking for a big elephant? Because you've said that the trigger is, you got your hand on the trigger.
Absolutely.
You're ready to fire.
You bet.
You got the money. You got 45 billion or whatever it is, right?
Enough. Yeah.
Enough. You got it sitting right there.
Yeah.
You're prepared to do it. How are you going to find the candidate?
Well, if you're talking about buying an entire business, which we're talking about in this case, I'm familiar with all the companies when you get to that size.
Yeah,
I've been to the elephant ground, and I've seen them all. And so it's really a question of when somebody at the company, the CEO, the board, is actually thinking about doing something, and then I can tell very quickly.
Oh, you know whether they are open to.
Oh yeah, whether the initiative really has to come from them, because. Coca-Cola isn't for sale, Wells Fargo isn't for sale, 99% of the companies are
IBM's not for sale.
Sure, and so, and I know the universe of companies of this size we're talking about, and if I pick up the phone one day and somebody says, we've really been thinking about things and we feel that we do better as a part of Berkshire.
So this is all about Buffett's secret to investing success. He's not looking for the next flashy stock, the hottest trend, or the biggest hype. He's looking for companies with moats, companies with a durable competitive advantage that will last for decades. Whether it's Coca-Cola, Apple, or other cornerstone investments, Buffett's strategy is about endurance, and that's exactly the mindset we need today. As we move into increasingly volatile markets, this advice is priceless.